Welcome to the Morning Outlook by Kalkine Media. Sage here with you. Hope you're enjoying the sunny Sydney weather this morning. And the SPI futures are indicating a positive start to Wednesday's trade with an increase of 45 points or 0.63%. This is after a decline of 1.5% on Tuesday, marking the largest dip in almost 3 weeks, triggered by the surprise RBA rate hike, being the most significant increase in 22 years, moving up 50 basis points. The Dow Jones Industrial Average rose 264.36 points or 0.8% to close at 33,180.14. The S&P 500 added 39.25 points or 1% to finish at 4,160.68, and the Nasdaq Composite gained 113.86 points or 0.9% to end at 12,175.23. US stocks closed higher Tuesday with technology leading the way, although there were concerns for the retail sector as a tug-of-war between inflation and rising costs continue. In Australia, the announcement Tuesday from the Reserve Bank that the cash rate will be raised from 0.35% to 0.85% will impact households, being the second rise in 2 months. And this rate increase is expected to cost the average household $159 per month in repayments, according to data aggregator Finder. Apple's shares rose 1.8%, but Target lost 2.3% after they announced that further discounts could be required to boost their sales. The 3 major stock benchmarks increased as the 10-year Treasury yield decreased to under just 3%. The energy producers surged with the rising oil prices reaching $120 per barrel, and this reflects an increase of close to 55% this year. ExxonMobil moved up 4.6%. Coles is in discussion. This is Coles, the cosmetics company, KOHL, is in discussions about its sale for $11.1 billion to franchise group Vitamin Shop, sending its stock soaring 9.5%. Other notable stocks that rose were Berkshire Hathaway up 0.48%, Tesla up 0.25%, Johnson & Johnson up 1.10%, and Bank of America up 0.55%. The stock market investors tend to get nervous when the 10-year Treasury yields trade above 3%. Many lenders and investment firms are asking their clients to buckle up and prepare for increased expenses. This is because corporations and governments can't afford the increased expenses if the Treasury yields were to increase to 10% like they were in the 1970s. In the US economic data, the trade deficit narrowed from $107.7 billion to $87.1 billion in April, and the consumer credit also increased. Last month, the S&P 500 got a taste of the bear market territory, witnessing a pullback of 20% from the highs before experiencing a bounce into more positive territory. However, the Nasdaq, which is more sensitive to rate rises, slumped into bear territory early this year. The S&P 500 is currently down more than 13%. Bear territory is usually signified by a drop of more than 20% for the year to date, such as a decline of more than 20% in the Nasdaq, which is currently down 22.9% year to date. The US government public debt to gross domestic product is at 125%, a significant rise from the 1970 levels of 31%. And compared to the inflationary 1970s, US corporate debt to GDP is 40% more. Onto the European shares now. The European share market fell on Tuesday. Worries were exacerbated by the World Bank data cutting the economic growth forecast for this year. And the German industrial orders fell, being the third consecutive time for April. The Pan-European Stock 600 index lost 0.3%, the German DAX index fell by 0.7%, and the UK FTSE index eased by 0.1%. In the London trade, shares of Rio Tinto rose by 2.3%. Now, this is pointing to Russia's war against Ukraine and the prospect of widespread food shortages, which could see the potential of the return of stagflation. There was little change from the yields, and the US Treasury sold $44 billion of 3-year notes at a yield of 2.927%. The US 10-year yields fell by around 6 points to near 2.98%. Onto the major currencies now. The major currencies stood their ground against the US dollar in the previous trade. European and US wise, and the euro increased from lows near $1.0 $0.655 cents to highs near $1 0.0710 cents, and there was near session highs at the US close. The Aussie dollar gained from near 71.60 cents to highs near 72.40 cents and was near the highs at the US close. And the global oil prices rose by close to 1% on Tuesday, with the US and Iran still in talks over the nuclear deal. Little progress to pump more global oil into the markets has been made, which could impact the near-term supply to Norway and Libya. And the Brent crude price rose by $1.06 or 0.9% to reach $120.57 a barrel. The gold futures price rose by $8.40 US or 0.5%. They're at approximately $1,852.10 an ounce US. Spot gold was trading near $1,855 US an ounce at the US close, and the iron ore futures price rose by 57 cents or 0.4% to reach $145.81 a tonne. Elon Musk's Twitter saga continues, with the Tesla CEO stating he could rescind the contract for the $44 billion takeover based on lack of information regarding the platform's fake accounts. Musk's lawyers wrote in a letter saying this is a clear material breach of Twitter's obligations, and legally speaking, Musk can only get a clean break from the acquisition if he is refused financing from the banks or if regulators forbid the transaction from processing. If his lawyers can link the refusal of fundings due to the Twitter bots, that could leave Musk with a $1 billion settlement fee instead of going through with the acquisition. Amazon stock jumped 6% in trading on Monday morning and closed the session up 2% at $125 after an unusual 20-for-1 stock split was decided upon and put into effect. This is a milestone for the company, with no stock splits being induced since 1999. Before the rise of the dot-com entities, and Amazon's share price has given significant returns to its investors since then. Thank you so much for your company on the morning report for today. Hope your trading goes well, and do keep watching Kalkine for more of the live expert talks and market insight. Sage signing off for now.